2026 is a great year because 2026 is the year where Bitcoin emerged as consensus global digital capital, and no one really disputes that anymore. Digital credit is what allowed us to buy 175,000 Bitcoin this year in the middle of a bear market. Now we can see a path to plug Bitcoin into every bank, every money market, and every investor in the world through digital money. Bitcoin is digital capital, digital credit is working, and the next exciting chapter in this entire story is the formation of digital money. That's the holy trinity, in my opinion, because if you can put together capital, credit, and money, then there's no reason why you can't.
Bitcoin isn't losing relevance. It's competing for the world's capital. Bitcoin's recent underperformance may have less to do with weakness and more to do with capital rotation. Michael Saylor, born February 4, 1965, is an American billionaire entrepreneur and the co-founder and executive chairman of Strategy, formerly MicroStrategy. Michael Saylor reveals that one of the biggest misconceptions about Bitcoin's recent underperformance is the belief that Bitcoin is losing relevance as an investment asset. In reality, he argues that Bitcoin is not competing with traditional stores of value like gold. Instead, it is increasingly competing for global capital alongside the rapidly expanding artificial intelligence sector. As hundreds of billions of dollars flow into AI infrastructure, including data centers, advanced semiconductor manufacturing, energy production, and next-generation computing platforms, investors have redirected substantial amounts of capital away from other asset classes, including cryptocurrencies. Michael Saylor reveals that this capital rotation should not be interpreted as a bearish signal for Bitcoin. Rather, it demonstrates Bitcoin's evolution into a mature global liquidity asset that competes for institutional capital allocation on a worldwide scale. While major financial institutions aggressively market high-profile investment opportunities, such as AI companies and private technology deals, Bitcoin continues to attract attention as a long-term monetary asset with unique characteristics. Michael Saylor reveals that market participants often focus excessively on Bitcoin's short-term price performance while overlooking the more important underlying capital flows. According to his analysis, Bitcoin currently appears undervalued relative to historical valuation metrics, and periods of capital migration into emerging sectors have historically proven temporary. As enthusiasm surrounding artificial intelligence investments eventually stabilizes, Saylor believes that capital will once again seek attractive relative value opportunities, potentially benefiting Bitcoin and Bitcoin-related assets. In his view, price may capture the headlines, but capital flows ultimately tell the real story. Price is the headline. Capital flows are the story. Like, share, and subscribe for more market insights.
A AI-driven black hole. It's orbiting through the capital solar system, massive gravitational pull. It's pulling credit money. It's pulling equity money. It turns out that it has pulled 10, 15, 20 billion dollars of capital out of the crypto economy. Institutional investors have sold 5 to 10 billion dollars of ETFs and things like that. So it's pulling some capital, but of course, Bitcoin is not funding all of this. Bitcoin is like 2% or 3% of the capital. That capital is being pulled into these hot deals. Every banker on Wall Street is out marketing the SpaceX deal, marketing the Anthropic deal. And so then the capital investors think, well, I'll take my mature money that's been invested in the same business idea for 3 years, 5 years. Let's roll it into this hot new deal. Let's get in on it. I know I'm going to get a 10 or 20% pop because the bankers, if they're going to do the deal, they're going to have to make the deal pop 10 or 20%. So I'm going to get in on the deal and then I'll get out again. And so I think capital is being pulled into all these hot deals. They're all competing for capital. When we get through, IPO summer or AI summer, I think a lot of that hot money will come back into Bitcoin because Bitcoin is now undervalued. If you want to look at Bitcoin, you can look at the premium or discount to the 200-week moving average, which is kind of like the book value of Bitcoin, or you look at the realized price, and what you can see is when the market's hot, it trades at 100% to 200% premium. And then when the market chills and the leverage comes out, it trades at that number or maybe at a slight discount. And so what you're seeing right now is this capital cycle. The more Bitcoin, has capital drain out of it, the more compelling the price is, the better the value. at some point, those capital investors, they're not maximalist in anything. They're not religious ideologues. They can be excited about this deal this week. They'll be excited about another asset next week. And they're all looking at relative value. So I think that equity markets have been performing well because they've been juiced by NVIDIA and Google and some of the AI story. And Bitcoin hasn't been getting that lift. But I think that after these deals flow and after capital settles, I think that a lot of the capital will flow back into the Bitcoin and Bitcoin-related securities. Probably the third quarter, and I think by the fourth quarter, things will be normalizing to our benefit.
Is there ever a point where you start questioning the entire thesis of Bitcoin when it has been underperforming so heavily? There's the old overlay of the M2 supply and Bitcoin, and the gap is getting larger and larger and larger. Is there like a point where you think, how are we going to proceed from here? Or might I be wrong on my thesis?
No, I feel pretty comfortable with Bitcoin right now. And I make the point that we've been in the business since August of 2020. And if you pull up the Bitcoin chart since August of 2020, what you'll see is 5 major drawdowns in 5 years. So it's not uncommon for there to be a major drawdown each year. This drawdown is 50%, but the drawdown in 21-22 was 75%. So we've lived through more brutal drawdowns, and it's to be expected. We were at an all-time high in October.
Yeah.
And so, go back 9 months and Bitcoin is an all-time high. What we're doing, we do with a minimum of 4-year time horizon, but normally a 10-year time horizon. And I don't think you can let a price signal that's only a few months old drive things.
While markets focus on volatility, Bitcoin's fundamentals continue to strengthen. Michael Saylor reveals that his long-term confidence in Bitcoin remains firmly grounded in fundamentals rather than short-term price movements. He argues that the environment supporting Bitcoin has improved dramatically over the past several years, driven by growing political, regulatory, and institutional acceptance. According to Saylor, support for Bitcoin now extends across key financial and government institutions, while accounting standards, tax policies, and regulatory frameworks have increasingly evolved in ways that facilitate Bitcoin adoption and investment. Michael Saylor reveals that institutional participation has become one of the strongest pillars supporting Bitcoin's long-term thesis. He emphasizes that spot Bitcoin ETFs have been the single largest catalyst for adoption, opening Bitcoin exposure to investors who previously required a regulated investment vehicle. The rapid expansion of these products, which now manage well over $100 billion in assets, has fundamentally altered the investment landscape and accelerated institutional access to Bitcoin. Michael Saylor reveals that Bitcoin's dominance within the cryptocurrency market has strengthened considerably, reinforcing its position as the leading digital monetary network. He argues that concerns about Bitcoin being replaced, copied, hacked, or banned have largely been disproven over time. Drawing comparisons to transformative companies such as Amazon and Apple, Saylor believes Bitcoin represents a digital network whose long-term value remains underestimated by conventional investors. Despite current macroeconomic headwinds and capital flows into artificial intelligence, he expects market conditions to eventually normalize, allowing capital to return to Bitcoin as investors increasingly recognize its role as a decentralized, non-sovereign store of value. Let's get back to interview.
And the fundamentals in the last 2 years are the president supports Bitcoin, the vice president supports Bitcoin, the head of the Fed supports Bitcoin, the head of the Treasury, the head of the SEC, the head of the CFTC. The accounting rules have been improved to Bitcoin's benefits. The tax laws have been improved to Bitcoin's benefit. The regulations have been improved to Bitcoin benefit. No bank was supporting Bitcoin 2 years ago. Now you've got 75% of the major banks starting to support Bitcoin. There were no ETFs 2 years ago. Now there's 100 of them, and they have $100 billion plus cost of capital. And so there was no digital credit and there was no bank credit on Bitcoin. Now there is. Meanwhile, we've gone through a halving. We're 2 years from another halving. So the fundamentals are much better. The support of the capital markets is much better. The support of the crypto markets and the bankers is much better. The competition is weaker. Bitcoin dominance was 41% in 2021.
Yeah.
That is 41% of all the crypto market cap was Bitcoin. In fact, it had been 70% and it fell to 41%. And people thought there's going to be a flippening and maybe,
I know,
and so, maybe Bitcoin's not the right network. And now Bitcoin dominance has returned to about almost 70%, 68% plus over those 5 years. It's a very unmistakable trend. And the trend is Bitcoin is the dominant digital monetary network. There's not going to be a competitor for that role. And is it going to be hacked? Is it going to be copied? Is it going to be banned? It's been copied 10,000 times. It's the winner. It hasn't been hacked. Everything else has been hacked. Bitcoin has been very stable and robust. Will it be banned? It's not being banned.
Yeah.
And so if you look at the fundamentals, you would say this is something everybody needs. Nobody can stop. Most people don't understand, but that puts it in the category of Amazon in the year 2010 or Apple in the year 2012, 2010. If you would ask a conventional investor, does home delivery Amazon network, does it make sense for a retailer? They all would have told you no. It's an awful business. It's going to fail. We don't need it. I don't get it. I'm not going to buy it. It was 10 years after it was short, after fundamentally you could conclude that it was unstoppable. There was no company on earth that could compete with Amazon in 2010. If you were honest, it took 10 years before conventional wisdom was, of course we need Amazon.
Mm-hmm.
And with Apple, they created the iPhone. And by the iPhone 3 or the iPhone 5, there's a famous video of me speaking about Apple in 2012. And it's like the iPhone 4 or iPhone 5. I said, it's very clear there's going to be 1 billion people with this device. They're going to sell another one every other year. It's impossible to stop. It's jewelry. It's going to be one of the great consumer products of the world. And they're going to have, this monopoly on a consumer network of 1 billion people and be able to control all the software and every service that goes to 1 billion people. This is going to be a great company. Conventional wisdom disagreed. Everybody thought I'm crazy. And for 8 years, people disagreed. And there was a point after it was probably 7 years later that people all of a sudden go, oh, yeah, I guess Apple's a good business. And so with digital monopolies and digital networks, normally the network forms to the point where it's globally unstoppable. And it's obvious if you're a tech early investor or if you're an early adopter, you're like, well, this is definitely the thing. This is going to win. But 99% of the money in the world, the conventional thinkers, they just disagree with you and they won't get it until they're beat over the head with it. The point when Warren Buffett didn't buy a tech stock and he's like, oh yeah, I guess we'll buy $50 billion of Apple, and Apple doubled. It's like, well, we'll have that Warren Buffett moment with Bitcoin. Not this year, maybe not next year. It doesn't matter. The point really is, does the world need a non-sovereign digital store of value bearer instrument that is deflationary in order to preserve economic wealth? Of course it does. Ask anybody that's ever had all their money stolen from them anywhere in the world by a hostile government whether or not they would like to keep their money. So the people that are here at this conference, the hardcore Bitcoiners, they get it. I think it's found a place, and you're in the middle of a painful drawdown. It's not as brutal as 2022, but it's not pleasant. But at the end of the day, you've got a war. The war will eventually end. You've got a very flat and high yield curve, a very restrictive monetary policy. Eventually, the short end of the yield curve will come in, and we'll have a more accommodating monetary policy, and we'll get a tailwind from macro. And we've got a massive AI black hole spinning through the system, and eventually the capital markets will come to terms with that. We'll hit an equilibrium, and then the capital will balance itself back out in a rational, risk-adjusted, diversified fashion, and that means a lot of capital will flow back into Bitcoin. And so I'm comfortable based on fundamentals. And, I think, ask me in a decade, right, how I feel then, and then we'll have real data.
Ultimately, the recent divergence between Bitcoin's price performance and its underlying fundamentals highlights an important reality of modern capital markets. Short-term market narratives often obscure long-term structural trends. While artificial intelligence has emerged as the dominant destination for global investment capital, this shift reflects competition for capital allocation rather than a deterioration in Bitcoin's investment thesis. Meanwhile, institutional adoption continues to expand through regulatory progress, increasing political acceptance, broader banking participation, and the rapid growth of spot Bitcoin ETFs. Bitcoin's rising dominance within the digital asset ecosystem further reinforces its position as the primary digital monetary network. History has repeatedly shown that transformative technologies and networks are often misunderstood during their early stages of adoption, only gaining widespread acceptance after years of sustained growth and validation. As capital markets eventually rebalance and macroeconomic conditions evolve, the long-term investment case for Bitcoin may increasingly depend not on short-term price movements, but on the continued strengthening of its underlying fundamentals. Has Bitcoin already won the race for digital money, and the market just hasn't realized it yet? Don't forget to like, share, and subscribe to the channel for more Bitcoin and crypto insights. Thanks for watching.